Why is it that a lot of people won't profit from it? The reason why a lot of people won't profit from it is really because
also, I'll be sharing how can you profit from this market if you haven't bought anything yet. And if you are fully invested, how to profit from it as well.
hello, I'm Jason Strongahead. Now, this second episode, I'm going to share with you, right? Why is it that a lot of people won't profit from it? The reason why a lot of people won't profit from it is really because of fear. The market came down. Wow, I think it's going to go down some more. The market came down. Wow, I think it's going to go down some more. The market really came down. See, I told you the market is going to go down some more. And then what you want to do is you want to catch the absolute bottom because you'll be buying really, really low and you sell really, really high. Voila, you become so rich, right? You become a millionaire. Okay? And are you sure you can catch the bottom? Are you sure you know exactly when the market will bottom? So what if the market came down? You say it's gonna go down some more. You are right, the market came down some more. Wow, see, the market came down some more. So let's wait. I think the market will go down some more. After that, the market rally, and then you say, this one dead cat bounce, it will go back down. Then the market rally some more. Then you say, it's gonna dead cat bounce, the market will go down some more. Then it came down a little bit. They say, see, I knew the market is gonna go down. So let's wait a little one more. Then boom, you miss the whole bull run. Possible? Very possible, right? I tell you, this is the kind of scenario that most of the investors who sit by the sideline and hoping to grab the bottom, the very, very bottom of the market, will probably miss the whole bull run. Yeah? How I know? Because it happened to me many times last time. Yeah? So I'm going to share with you what are some of the mistakes that I've made previously. So how are you going to capitalize on this opportunity so that you will be better off, right, once the market recover? It's one very, very important question. This is super important because it will determine, right, your psychology. That means how much you should buy, how long you should hold, and what kind of stock you should be looking at. So again, before I'm going to share with you all this information, I just want to let you know first, I'm not a professional. Whatever that I'm about to share with you is for entertainment purpose only, okay? So if you're going to take any position, please remember to do your own homework or seek professional advice.
Before buying anything, you must ask yourself, are you looking for lump sum capital gains or are you buying to get monthly income, right, from the dividends?
So my first question that I will ask myself before I go into the market will be, am I going into the market to make a lot of capital gains? That means, right, if let's say I got 100,000, so if I were to go in to this market with my $100,000, what do I want to achieve? Is it that I want to make a lot more money from the 100,000? That means, right, when the market recover, I hope to see my 100,000 grow into 200,000, 300,000, okay, or maybe 50,000. Yeah. So is this your objective? Or I wish to go in using 100,000 and I hope to get a lot of dividend out of it. So that means, right, what you want to do is to make use of this market opportunity. That means this market plunge, right? And you're going to select some stocks that will give you very, very high dividend. Okay, and these stocks are all fundamentally very, very strong stocks. And right now, when the price is low, the yield is very good, and this is the best chance for me to go in. So when I go in, and every year I know that with the 100,000, I probably will get about maybe 10,000 dividend every year, year on year. And this is the kind of stock whereby I will hold, and I will hold forever, probably won't sell, or hold for a very long time. Okay, so even after this stock has helped you to generate from 100,000 to grow your capital to 200,000, you will still not let go because you are looking for cash flow. So which one are you looking at? That's a very important question. So a lot of people who are younger and a lot of people who are more aggressive probably will be like, I don't want the dividend, right? I want capital gains. So if you're looking for capital gains, then this is what you will do. Huh? What is it? Oh, which one I'm going for, is it? Okay, let me share with you. I'm going for both. Yeah, so both also I want. However, some people say, I want stocks that will give me dividend plus capital gain. Okay, when they really give you capital gains, are you going to sell your shares and then give up the dividend? You sure you're going to do that? So when I say I go for both, I hope you don't misunderstood that I'm those greedy type whereby I want my share to give me a lot of dividend plus capital. Okay, it's very hard to come across these two things because one day you still have to let go your stock, because in order for you to see the capital gains, you have to close your position to see the actual gains, right? Yeah. So when I say I go for both, what I did is I split my portfolio into two parts. One part is for capital, one part is for my dividend. That means more for income generating stocks, because I am a freelancer, and I'm always building a pot, right, whereby it will give me a lot of income. So hopefully by a certain time, I'll have enough income to cover all my expenses, and I no longer worry about whether I will get another job, another speaking career, or another class to teach. Then all that really out of the question, and I will be in the position whereby I will be able to teach only when I want to teach. It's no longer about money. It's really because I really enjoy, and I still enjoy teaching, and still enjoy sharing. Okay, so let me share with you the different perspective, right? What you can do. First one, I think some of you probably have seen this stock before because I kind of mentioned this stock previously. This stock is called IJR. It kind of mirror the Russell 2000 or the small medium sized companies, right? And this is the index that reflects the performance of this small medium enterprise company. And you can see, right, when the market goes up, the pink color line represents the share price of IJR. The green and red color line represent the Dow Jones or the overall market. So when the market goes up, this stock continue to go up. When the market goes down, this stock will also go down. Can you see the difference? When the market go up, this stock will go up even more than the market. And I like this kind of stock. Okay, so right now, if you want to make more capital gains, yeah, this could be one of the stocks that you can look into and explore. Because, right, if you believe, now this is important, do you believe that the market will recover? So when the market recover, and this stock probably will recover in a higher percentage than the market, and that is where you will beat the overall market return on investment. That means your return will probably be higher than the market. Yeah, so that could be the first one. And if you're already holding this stock or already bought in this stock, when I talk about it, congratulations. If you look at the after the market closed on last Friday, so what happened to the market right now? It has really rallied 44%. Yeah, suddenly the price jumped to about $70 over from $44. So take a look. Yeah, so but is this price sustainable? Now here are two things, right? Why the market is so crazy at the moment? Because some of the stocks are ridiculously low price, and that price is not a reflection of the overall fundamental of all the businesses. So that's why, right, you're seeing stocks like from $2 in one day jump to $14. Oh my god, 700% return. Okay, you can almost close shop already, right, depending on how much you invest. So a lot of this kind of situation is happening. Whether is this sustainable, I'm not too sure. Yeah, so if you are a short-term trader, once you hit this kind of scenario and you're lucky that you bought into the stock that rally a few 100% or 40 over percent, what you can do is take half of the profit first if you want, yeah, and then reassess again. And the other one that you can take a look will be find those stocks that are disruptive in nature and the kind of price movement is way above the market movement. So when the market recover, they probably will move up a lot more again, and that's where you will get a lot more return. Yeah, so this will be the kind of stocks, and you can look at Tesla. Now Tesla has rallied up a lot, right? Over $1,000, and then after it dropped now to about $400 over. The lowest was about 350, I think. Okay, so then if when the market is going up, can you see Tesla is wow, going up a lot more. When the market comes down, yeah, it is still down. It will also come down. So when the market goes up, what happens is if you believe this stock will continue to go up in this kind of a fashion, that means, right, your returns will be higher than the overall market rate. Okay, now then this is what some people ask me. I'm already fully invested in the market. Okay, so because I'm already fully invested in the market, when the market goes down, I am under the water. I'm also in the market already, so I'm also under the water because some of my stocks lost a lot of value. Yeah, I'm not selling any one of them. However, what else can I do when the market recover? Because I'm not buying more, I'm not selling anything. So when the market recovers, right, it's more like back to square one. I never make more money from this stock market. So if you want, okay, of course there's some risk, but if you want, this is what you can do, and this is what I did. I in fact sold some of my favorite position. Yeah, I was holding IJR. I was holding Tencent. I was holding. I don't have a lot of position because I believe in. Yes, I believe in diversification, but I don't believe in having too many stocks. I believe in having a few just quality stocks. And right now, I'm taking a chance. Yeah, you can say I'm a gambler as well. Yeah, because I after watching some videos about Tesla and after I've done some research about this stock, I believe that this stock probably might have a very good potential of rallying. Of course, I may be wrong. I don't know. So I'm taking a chance, and I'm not dumping all my money inside. So what I did was I closed my position for 10 cent. Yep, and I closed my position for IJR. Then I pump into Tesla. So what happened is these are my two stocks, right? Okay, so I'm going to share with you, yeah, how you can do the same. I call this repositioning. Yeah. So you already have a position. Okay, you already have a position. So this is your stock, and then so let's say, right, originally, okay, your stock is supposed to be here, right? Okay, so you now your stock has dropped in value, so this is your stock. If let's say the market were to recover, it will only recover back to this level, right? So you will not make, you will not lose, correct or not? Okay, so this is where you buy, or this is where you buy. Okay, and you go up, then you come back down, so you didn't make, you didn't lose, or you lose some. And then if you were to hold this position, and when the market recover, you will just be in the original position. That means you didn't really benefit from the market. So that could be the first scenario, right? Now, what you can do is, yeah, you can close this position. Okay, you can close this position. So let's say this is worth $1,000. Yeah, and when it rally back up, right, you believe that you will make a 50% gain. So that means if it rally back up, your total position will become 1,005. Just an example. Yeah, but you don't want this to be happening to you. You feel that if the market were to rally, you want to make more than that because you want to take advantage of it. So if let's say there's another stock whereby if it rally, it would often rally more than the market return. So for example, let's say you buy a stock like maybe Amazon or Tesla, and you believe that these are all the disruptive stocks. Example, just an example, right? Okay, and when it rally, it will go up more than the market, which is more than 50%. So you go up maybe by 100%. That means, right, you transfer this position to another stock, and then when it rally, you will make $2,000. So that is where you probably will be about at least $500 better off, right, than your current position. So that is what I did. Now, if you have not been into IJR, then you can go into IJR. Yeah. But if let's say you're really going to go into IJR, wait for the dip. I think so. Yeah? Because suddenly there's a 40% jump. Anything that already go up a lot, I don't like to chase the market, to chase high price. Yeah.
So for instance, when the market rallies, can you see IGR rally 7%, Tencent rally 3%, and Tesla rallied over 17%. So as a result, I make more overall.
So there will be one scenario. Now the other scenario will be if I'm looking for dividend. Yeah, I'm looking for dividend stock. That means I'm looking for income stock. So what can you do? Yeah, there's a couple of stocks. Now this example I'm showing you are all US based lah. Yeah, Singapore I've got a lot of example, but probably the video will be super long. Okay, and so let's take a look at this stock. This stock is a SRET. It's a REIT. So when the price of this REIT is fairly stable. Yeah, fairly stable. Okay. And because it's the nature of REITs, right? Normally, when the market goes up, it doesn't go up a lot. When the market comes down, it doesn't come down a lot. Usually, okay? Yeah? And can you see what is happening? Suddenly, the price went down significantly more than the market. So because of that, right, the yield right now is super good. It's, I think, 8.75% or something. Yeah? So if you buy into this market now, what will happen? This stock probably will go back to original price, right? You will make the capital gains, and it will go up slowly or in a hurry, we don't know. But if you buy now, what guarantee you will be the 8.75% dividend yield. So if you put in 100,000 every year, you will get back $8,750 every single year. So 10 years, if you hold for 10 years, that is a lot of money, 80 over 1,000. So and that is, I'm just talking pure number, not compound yet. Compound probably even faster, you double your money. Yeah. So when the market goes back up, you probably will make back the capital plus the dividend. And if you intend to keep it as an income, this is a very good kind of a stock that you can hold. Okay, the other one will be even more reliable. Yeah, I think so, in my opinion. I may be wrong. So remember, I'm not professional. So this particular stock called SPYD. SPYD, they will group all the S&P high dividend stocks together, and they will give you some return, right? And right now the dividend yield is quite good, about 5.11%. So that means, right, when the market, this is the market, when the market goes up, this stock will probably also go up. And when the market recover, then this stock will also recover together with the market at the same rate or probably slightly lower. However, the dividend, right, is going to be good. So no matter what, you continue to get dividend year after year. And then you can take the dividend and reinvest again, and that's how you get a lot more return, and that's how you get a lot more cash flow. So I have shared with you two ideas. Okay, first idea will be how are you going to get, what kind of stocks you should be looking at in getting more capital gains, or what kind of stock you should be looking at in terms of getting cash flow. And if you have not invested, good for you. Okay, because when the market go down by 30%, you are actually ahead by 30%. Because most people who already go in before the market plunge, now they are negative 30. You are positive 30 because you haven't go in yet. So you can go in and get a lot of stocks at a very good price. Now, if you're already in the market, so this is what you can do. And like me, I'm already in the market. Okay, so what I did was I closed some of my position and I transferred this position into stocks that I feel when it rally up, it will go back up higher than the market average, so that I'll be able to maximize my gains from this market crash. So I hope you have managed to pick up some ideas from my video, and thank you for following through. Stay tuned to my next week's video. And if you have any other things that you would like me to share, please feel free to comment on the comment box. Okay? And if you like my video, please remember to subscribe as well. And clicking the like button will really help me a lot in the algorithm. So I will see you next week. Thank you.